Warren Buffett has given over the last 20 years compounded annual returns of 20%. And Howard Marks came very close with a compounded annual return of 19% over the past 20 years.
Well, I'm not impressed, Radha, because compare this to our Indian mutual funds. What have they done? Over the past 20 years, at least 10 funds have given 30% compounded annual growth rate. Yes, that's our own Indian mutual funds. And it gets better. 3 of them have actually given 50% compounded annual growth rate over a 20-year period. And even over a 10-year period, there are so many mutual funds with 20% compounded annual growth rate.
Yeah. And this is not entirely lost on the Indian investor, as you just heard. The systematic investment plan culture is well and truly growing. And what we understand is that from 2010 to 2013, total assets under management remained practically flat at about 6 lakh crore. But from 2014 to 2016 end, early 2017, the assets under management have doubled from 8 lakh crore to 17 lakh crore, better than double.
Oh yes, and you know what? That explains why. When was the last time we had FIIs selling 40,000 crores in Indian market and the index going up 10%? I don't remember that, and that I think is a lot of credit to our domestic investors. Yes, the mutual funds, but they are managing the money put in by the domestic investors, so hats off to all domestic investors.
Yes, I would assume that this is the coming of age of the domestic investor. But coming of age doesn't mean coming of maturity. Adolescence can be chaotic, as Howard Marks told us. And if adolescence has to be led on to genuine growth, to mature adulthood, then what you need is very good advice. And that's what we are trying to get you from our financial therapists, if I can call you all that. Well, today we understand from the papers, of course, that Mr. Rakesh Jhunjhunwala's total net worth is 10,000 crores. Well, you know, at CNBC-TV18, we cannot invest in shares. So we depend on mutual funds. Since you are neutral party, Ridham, can these guys make me as rich as Rakesh Jhunjhunwala?
Yeah, well, see, we can try. You mentioned Warren Buffett, so there's a very famous quote by Warren Buffett. He said that I became rich because I was lucky. And my luck began the day I was not born in Bangladesh, but United States of America. But I think we're plagued by 3 things, as Nassim Taleb would say, 3 intoxicants or 3 habits which really hurt us. The first 2 are very obvious. So that's, drugs, which can be intoxicating and you can get hurt, and most of us should not be there. The second is carbohydrates. We're all plagued by carbohydrates. So that's why, you suffer from all these illnesses. But the third one is what really hurts you, Radha. And that's why you cannot become Rakesh Jhunjhunwala, which is your monthly salary. If you're willing to give it up, then I think they can make you Rakesh.
Well, this is a tall ask at the moment because I can't see the returns. But over to you.
Oh, yes. Not Rakesh Jhunjhunwala, but Raamdeo, let me ask you this one.
Make us Raamdeo.
Yeah, how can I be as rich as you? You are also quite rich. How can I be as rich as you? What should I do in terms of investments?
Have 100% of your savings in equity. That is the first thing. Actually, that's the first thing. Then after that...
You don't own your house?
Yeah, I have a house, but that's it. After that, everything is in equity. And you see, actually, Buffett should be called King of Compounding. That title has, in any way it has not come. But he's one guy. For 50 years, he has compounded the rate of 20%. And just now you are reeling out information that there are so many funds which has done better than 25, 30%. So for you to find one of the managers who is going to do 25%, at 25%, if you start with 1 crore, in 10 years you'll go 10 crores, 20 years 100 crores, and 30 years 1,000 crores. And 40 years 10,000 crores. That's it.
There you are. Okay.
Yeah.
Well, okay. Let's begin with how they themselves inculcated this habit of systematic investment. Madhu, narrate to us a story that really inspired you about yourself. A great idea you got, stayed with it, and made money.
So, what do you want? You want a stock idea? You want a mutual fund idea? What do you want?
Stock idea. Anything.
No.
Any idea to get rich.
So I'll tell you, it's been a fantastic journey with the Reliance Group and with the fund. So when I joined, the total equity corpus was 12 crores. And as Sandeep honestly and candidly admitted, that none of us thought, we always were convinced that it's going to be big, but none of us thought that in matter of 15 years, from 12 or 100 crores, we'll be managing 3 lakh crores, upward of 3 lakh crores. So it's been a fantastic journey, and it's been extremely satisfying. One thing which has remained common between all people who work in Reliance Mutual Fund, now whether you go and ask a peon or a fund manager or a marketing person, is the DNA, that we can do it. And we are extremely passionate about doing it. And that DNA has continued to remain, that regardless of the adversity, regardless of who says what, and if you see then in 2006, 2008, 2004, there are so many events when the market fell by 1,000 points, 1,500 points, 2,000 points. And here we are. We were looking for those opportunities that, whenever the market falls, we have to go hold an event in Bombay Stock Exchange. And I used to lead it, like, Sunil, myself, we used to stand up and say that this is the opportunity. You please invest more. So it's been consistent passion and our conviction in India and equities. That is what has led to this success.
Okay. Jakes, I heard you say that you should avoid temptation to trade. What are the biggest investment mistakes that people make, and that you should say that you should avoid if you want to make wealth, like Rakesh Jhunjhunwala or some of the other well-known individuals?
I think the two biggest things is staying with your conviction and accepting that you're wrong, which means actually eliminating your mistakes quickly, taking your losses quickly, and the ability to ride with your conviction, not just 1 year, 2 years. If you see the returns these people have made, the power of compounding comes in by definition when you are invested for multiple years. And to underscore that point, Warren Buffett, who's $65 billion today, was actually $1 billion when he was 53 or 54. So the power of compounding from 53 to 85. And in a private conversation, he's actually said that all that he did after that was eliminate the foibles of youth, if you will. The mistakes that you make as a youth got eliminated when he was 50 plus.
But what are those mistakes?
Exactly things like this, the temptation to stay with, the most difficult thing is to take your loss and get out and say, I made a mistake in an investment. And the most difficult things is to say that I'm staying the course year on year, year on year. Look at the winners. Look at, for instance, Rakesh Jhunjhunwala, you're talking about Titan. It's not that Titan has been a one-way run, right? It's been ups and downs through multiple, and every time it's moved from a particular range, it's kind of moved up another 50%, 80%, so the compounding just keeps getting better. So the courage of conviction to stay with your winners and actually take your hits and say, I made a mistake. I think these are two of the most important attributes which can make or break that compounding, if you will.
Yeah, Ridham, that's an interesting point, because, I get a lot of messages from retail, a lot of tweets as well. And the general theme is that people stay invested with their loss-making investments, and they book profits, when a stock goes up 10%. In your experience, what should be the holding period? I remember I was having a conversation with you. You said 10 baggers don't interest you anymore. You are now looking at 50 and 100 baggers.
Well, I was always looking at those, but not that I've made too many of them. But, just on that point that Jakes mentioned, I'd like to summarize it in one line. It's about time, not timing. So, a lot of investors get too caught up with timing. Ye bottom aa raha hai, pakad lete isko. But that is, very hard to do. Just spend time in the market, and everything gets taken care of. In fact, it also forgives you for some of the mistakes you make. My own experience is actually the mistakes, fall by the wayside because the winners are so massive in size that the mistakes look very small in hindsight. So if you're not even in a position to detect that, it's still not a problem, but you have to spend time. And time, I think, is not about 1 year, 2 years. It's multiple periods of 5, 7, 10, 15, 20. I like to believe it's like your whole life career. So you start investing when you get a job, say at 25, and then you invest all the way till you're 60 and then enjoy the fruits. So say 35 years.